Well, we're happy to be joined now by Peter Ryan. He's the CEO and founder of Ryan Research, and he has been on a bit of a journey when it comes to crypto. Peter has been in the space. He's going to tell us all about this for a long time. Came to sour on crypto, wrote an excellent essay. This is the first element we could go ahead and put up on the screen for Compact Magazine recently that I cannot recommend to people enough, especially if you're sort of crypto curious. There's a lot of great explainer details in this piece, and it's really, really helpful kind of glimpse inside of the industry that goes into granular details. So, Peter, thank you so much for being here. We appreciate it.
Also has a fantastic headline there, Money by Vile Means.
Yes, thanks for having me. For the Shakespeare buffs out there, that's where that line is from.
Yes, of course. So tell us a little bit, and people can read more about this in the essay, but you have such an interesting background in the crypto space. And right now, Republicans, this is the so-called news hook that we want to talk about, made a big push with the Genius Act before they headed out for August recess. And people right now are kind of trying to figure out what it means for the industry. The industry was pretty supportive of the Genius Act, although there was some controversy about it, but it regulates stable coins. So, Peter, we'll get into all of that. Let's start with your background as somebody who was initially in the thrall of crypto's promise to decentralize the monetary system and came to sour on it. What was that process like for you?
Yeah, so I got into Bitcoin in 2013. It was some of the early crazy days. It really attracted me because I was sort of part of this generation of the Ron Paul movement and its response to the financial crisis that occurred in 2008. And Bitcoin seemed like this great way to marry the private sector with all of these Austrian economic beliefs. And so that's how it was sold. And many of the early Bitcoiners were these idealists. But as time went on and I started to work in depth inside the industry, I met a lot of the big players. I saw different historical events transpire that would reveal some of the inner workings of how this market operated. And from there, after being employed as a research analyst with CoinDesk, I started to doubt some of these idealistic tenets. And then in about 2019, I really came full circle and saw a lot of what was sold in 2013 to me just did not cut the mustard. It wasn't true. History proved it was not true. And so ever since then, I've been an independent consultant talking about my skepticism on Bitcoin, on crypto in general, and more recently, the very specific and unique role of stablecoins in the government's policy.
I want to get more to stablecoins because that's a very important piece and ties into the quote unquote Genius Act that just passed. But you wrote in your piece, when Bitcoin, the first cryptocurrency, was invented, it was promoted as a financial technology that would empower individuals and wrest power away from the state and centralized elites. Just a decade and a half later, those same elites, including the Trump administration and bipartisan majorities in Congress, have embraced cryptocurrencies. But this is because rather than lifting up ordinary citizens, crypto has become a new means of expanding elite power and wealth. Can you elaborate some on that for us, Peter?
Sure. So what you have to understand is that the reason the government is attracted to crypto and Bitcoin right now is because it helps government.
Yep.
That's sort of a pretty obvious point, but a lot of people aren't so clear on that.
Peter, can you speak to as well? It helps government and helps big business, right?
Exactly. So a way to sum this up is that the cryptocurrency system with all these coins, with stable coins at the heart of it, they are a shadow central bank system conducting shadow money printing to do shadow debt monetization and shadow quantitative easing. So that's the shortest way I can describe it. What that means is essentially there is all this paper value being generated in the crypto markets. And as that paper value keeps going up, as that asset inflation keeps going up, that allows the froth to spill over and very specifically start buying US debt as the rest of the world enters its multipolar phase and stops buying US debt. So this is why stable coins, where they need to be backed by US debt in order to operate, are now a bigger holder of US debt than countries like Germany. And then as we get into the private sector, all of this froth that's coming out is actually starting to enter the private sector enter equities. And that's going to create a knock-on effect that's going to start pushing that up. So basically, the crypto sector wins, the government wins, and the traditional incumbent corporate elites win through this big triangular system.
So this obviously, this leads us to the question of how you have still so many true believers in the crypto space, people who haven't been on the journey but started from the point A that you started on, and are still there, who continue. I did see some criticism of Genius and some of the other legislation that's been considered by Republicans in particular from that kind of true believer crowd who are worried about central bank digital currency and all of that. But you have people, I think of the Winklevoss guys who are like libertarian-ish, and maybe they're not the best example because they aren't like from that libertarian kind of crunchy world that came out of the Ron Paul 2012 movement in particular. But there are true believers still in the space who continue to believe that crypto is a net benefit when it comes to decentralization and when it comes to undermining globalism and all of that. So can you tell us more about why people you think, people you've spent time around are still kind of clinging to that in the face of what just seems so obvious to be a centralization effort, and maybe even also if you're aware of some fissures in the movement as well that you could fill us in on?
Sure. So this is where the technology, the sense of mechanics, innovation, anything like that is really not what's causing those true believers to stay in the Bitcoin camp. I think it's more exactly that. It's belief. I think Yanis Varoufakis, the Greek economist, put it best when he talked about how classical liberalism and neoliberalism centered the market as this divinity. And then as he's written more recently in his new conception of that, which is like techno-lordism, he says that's transition from the market to the algorithm, to the code, and that's the new divinity. And I think that's what's going on here, that people are trying to externalize what is ultimately a democratic process to shape society in the way that the majority of voters would like it to be. But instead of doing that the hard and very direct way, it's this sense of externalizing the problem into these things. Well, the market will fix it, or the algorithm will fix it. So I think that is really inherently baked into the Bitcoin thesis, and that's why people can't really break out of that.
I'd like for you to talk a little bit more about that, because I'm sort of fascinated by, it is almost like a religious devotion. There's like a cult-like aspect to people who are those like dyed-in-the-wool true believers. And you were one of those people. So I'm curious, it's very hard when someone has sort of like this, this ideal, this ideology they've committed themselves to, they've, like committed to it personally. There may be financial assets at stake, et cetera. What was like the first piece of information that for you was like, wait a second, that started you on the trajectory away from thinking that this was, some sort of solution and that it would actually empower people, and is serving in exactly the opposite capacity?
Sure. So one way that this divinity of the code starts to come into play is how people always talk about Bitcoin's a hard asset. It has a fixed supply. It's 21 million coins. It's capped. It's like gold. So people always talk about that. But no one really asks the follow-up question. And so I started to ask some of these follow-up questions, which in the end seem very simple. But it's like, why is that the case? Please demonstrate how that maintains the case. Because gold is something you have to dig out of the ground. But Bitcoin is a software. And as anybody could tell you, humans write software. Humans also have to update software.
Yeah,
and
at least for now.
Yeah. And so once you start thinking that, then you immediately start to go, well, who are these humans? Like, does anyone care, like, who these people operating this huge asset in our economy now that's becoming so interdependent? And no one seems to really want to broadcast that examination. But like, if I were to just show you a little stat here, like, would it be surprising that only 42 software developers have written 90% of Bitcoin's code? And there's about 5 software developers, give or take on the year, that have sort of administrative privileges on top of Bitcoin's code. And we can monitor these people, we can identify them, we can see what they're chatting about, but no one wants to sort of comment on this. But if we start to look into it, then we can see, oh, well, this property of fixed supply is only a subjective whim of this, something that looks to me like almost a central bank committee of software developers deciding what their monetary policy is on Bitcoin. So you could say maybe they choose the fixed supply and that's good monetary policy, but it does not change the fact that there is centralization going on there.
And also globalization, which lends itself to centralization in a high-tech age. And this is, Peter, one of the questions I always have for people in the crypto space, because I'm not, somebody who's like super deep in the details. I'm not like major investor. I'm not doing code. I'm not doing any of that stuff. But I have never understood how structurally crypto can exist with any regulation in a way that is utopian, or I don't mean that in a pejorative sense, in a way that's true to the spirit that I'm totally sympathetic to and supportive of decentralization. So when I see someone like Cynthia Lummis, Republican senator, who's been very, very supportive of crypto over the years, going to these conferences and being met and lauded and praised by people in that space, I just am curious structurally, if we steelman this, is there actually a way in a fantasy hypothetical scenario where crypto could exist in the year of our Lord 2025, in the 21st century, in a way that is not, with any regulation, in a way that maintains the spirit of decentralization? Because that to me just seems impossible on its face, but I don't know. Like, is it possible to regulate crypto and also have crypto be this decentralizing force? I don't get it.
So there's a theoretical argument that academics can have on the core concept of peer-to-peer technology. Now, when you look at the academic literature and the case studies involved, usually small-scale peer-to-peer technology works. But the challenge is, when you scale it, this is where the problems of centralization come in. Now, when you combine that with money and saturating people's financial transactions, incorporating into state institutions like the Treasury and so forth, that's even a harder problem to try to figure out. So, and even in the structural ways that Bitcoin's designed, a lot of people say that, oh, well, it's censorship resistant, it's decentralized, you can just transact and send money anywhere you want. But there are middlemen in Bitcoin, the miners in Bitcoin, those really power-hungry server farms out there. Those are the middlemen of Bitcoin, and they're the ones that get your transactions and decide if they're going to process them on the blockchain or not. And we've already have documented examples of these miners complying with the Treasury's OFAC standards to sanction and blacklist certain Bitcoin addresses. And there's even more advanced ways to do that that are too long to get into. But this is where we've already been through the looking glass here. A company like Mara has championed this idea of being compliant with the OFAC standards in the mining industry, and goes on to say, their CEO, I believe, that the way for the U.S. to increase its share of Bitcoin miners is that the U.S.-based Bitcoin miners need to be more compliant to OFAC. So it really gets into this catch-22 that as the U.S. grows its Bitcoin industry and wider crypto industry, it keeps diminishing those ideals of decentralization. So I would say it's a very hard nut to crack, but where we get into now with this legislation coming forward and how we've accepted that crypto is now a normal part of our economy, where I look at that, it's not innovation. It's not a new product or service that's really adding value. What's going on is we have two financial systems, two financial infrastructures. One is the traditional one with all the regulations, and that would have been a real fight to try to deregulate that. But why go through the pain of doing that when you can just open up a parallel system with all the deregulation, and then when you combine them in aggregate, the net is that you have a more deregulated financial system. So
Right.
that's really the trick going on here.
Well, and that leads to, my final question, which is, are we looking at some sort of a crypto bubble bursting and taxpayers being on the hook for a big crypto bailout, given that this is no longer a separate ecosystem. This is completely mainstreamed within our financial institutions. And President of the United States, obviously, himself benefiting to the tune of millions, if not billions of dollars from the crypto industry. So, I mean, does that seem to you like where we're headed?
It is very likely. I have suggested that this strategy of pumping up the crypto markets has a short-term logic to it. But like all bubbles, all bubbles have a short-term logic. They go
true.
up. That's the nature of bubbles.
Yeah.
So no one can ever predict the exact time when a bubble will pop. But it seems like once we get outside of, the 5 to 10 year horizon, that's where the wheels come off. And let's compare this to the housing bubble. There was at least an argument. There was a physical house.
Right.
There was a rationale to why the value could keep going up and why there was fundamental value underlying it. With this, we almost have a parity where these are completely digital, fictitious casino tokens, practically.
Right.
And they're making up more and more nominal value. And when these things pop, there's nothing underlying it. And so what ends up happening is we just start piling more and more risk into this type of asset class and making it, collateralized to traditional transactions that we do in the economy. If you start looking into how mortgages are starting to accept these as collateral and so forth, and other ways. And so once that keeps getting saturated, now this asset class, which is, no one would think it's crazy for this thing to go down 50% in a day. Even with the stable coins that are supposed to be the safest thing there, traditionally we've seen a lot of allegations that they don't actually back their coins with one-to-one reserves, which is what they say they are doing. The New York AG actually said this in 2019 about one of the major stable coins. She said they lied. She said that they did not have the reserves, they said. Their lawyers had to admit it, and they ultimately settled with the New York AG. And so this has all been documented. We have cases where the market has found this out, has broken the peg on the stable coins. We have legal sources that have proven this the case, like the New York AG. And we just have our sort of other historical examples of crypto going pop. So the fact that it's going to be bigger than all past bubbles of crypto in the past doesn't really negate the fact that there is no underlying value. This stuff is very risky. There are multiple vectors where this thing could have a problem, whether on the technical side, there could just be a bug that sends everything down. So very, very unsavory prospects.
Yeah, I mean, the value, to the extent that there is value, is of it being peer-to-peer and decentralized, and that goes away. And so I guess my last question for you, Peter, as we're wrapping this up is, do you think there will be more people, because you know people in this space, and I know many people in this space and people that I really like and totally sympathetic to, like Ron Paul type people. Do you think there will be people in this space that come away with your perspective soon? Do you think maybe we're in a heighten the contradictions phase post-Genius Act and regulation that might be coming from this Republican administration where others start to get really worried? Or do you think everything is so attractive and appealing right now that it's just kind of going to be pedal to the metal for the next year or so?
Yeah, I think it's hard to distract people from the gloss of a bubble.
Yeah.
There's certainly going to be momentum piling in now with this legislation. There's a lot of business institutions that want to incorporate this, get old people to put their retirement in it, get young people that are busy sports gambling to do more crypto gambling. So there's momentum here, but I think in terms of the early Bitcoiners, a lot of them would actually be sympathetic to my point of view, even though they might not go all the way that I have. I'll reference one individual. He's the editor-in-chief of Bitcoin Magazine, Mark Goodwin. He wrote the book, The Bitcoin Dollar. We generally agree about 80 to 90% on all of these problems and criticisms. So I would say right there, if the editor-in-chief of Bitcoin Magazine, who's like a real hardcore Bitcoiner, has these very similar opinions and sympathetic to the way I see it, that's probably saying something. As another little citation here, when I released this Compact article, the founder of the Peer-to-Peer Foundation, which included a forum, which actually was the place Satoshi Nakamoto first announced his white paper introducing Bitcoin to the world. The founder of that actually endorsed my Compact article, saying this was actually very legitimate and valid criticisms. So I would say with those two sympathizers from the early days, it's hard to make a claim that this is that outside the norm. But there's a lot of people, newer faces, and maybe people with more dollar signs in their eyes, not so much Bitcoin signs, that are looking forward to this current bubble momentum.
Fascinating. Peter Ryan of Ryan Research, thank you for taking the time to talk to us about this piece. Thank you for writing the piece. We hope to have you back. Appreciate it.
Hey, if you like that video, hit the like button or leave a comment below. It really helps get the show to more people.
And if you'd like to get the full show ad-free and in your inbox every morning, you can sign up at breakingpoints.com.
That's right. Get the full show, help support the future of independent media at breakingpoints.com.